The cost of car insurance is skyrocketing, so much so that it's contributing to the recent hotter than expected inflation data. Our next guest has some ideas for how you can drive those prices down. With us now, Matt Simon, board member of Trusted Choice and CoverLink Insurance president. Thanks so much for being here. So I guess we should start first of all, Matt, with why insurance costs have gone so high in the first place. What are the main factors behind the increases that we've seen?
Well, yeah, if you think about it, insurance is not immune from the macro trends affecting the economy, right? So inflation being what it is really driving up largely the cost of auto insurance, because when you think about what auto insurance actually pays for, it pays for when property is damaged or people are injured. And so when you think about, property, meaning people's vehicles, homes, things like that, cost of car parts have increased drastically since January of 2020. And then the second piece of that, cost of medical care if people are injured, we all know the cost of that has gone up substantially. So really the auto insurance industry is reacting to, broader macro trends that are affecting the overall economy right now.
And Matt, are we also seeing more accidents on the road that we used to? Is that also another possible contributing factor?
Absolutely. So, the two big factors now driving the cost of insurance, we talked about one being inflation. The second piece is exactly what you said. We've got, from a claims perspective, an increasing frequency of claims that are occurring. And when those claims do occur, the amounts being paid out are far higher than what they used to be, which is interesting because, you think about when COVID was going on, there was far fewer drivers on the road. So the number of exposures actually had gone down quite a bit. So you saw the frequency of claims decline, but even during COVID, the severity of claims, so what was being paid out when those claims occurred, continued to increase and has only accelerated post-COVID. And even now, once we're out of COVID, we've started to see that frequency tick back up as well. So you're in a position now where you have increasing frequency and increasing severity when these claims occur.
So let's get to what you can do about it. How do people try to save money on this?
Yeah, so there's a couple things. One is largely within individuals' control, right? So everybody's experiencing auto rate increases right now. The degree to which those increases they're experiencing can vary widely depending on individual factors, meaning what's your driving record look like, claims violations, speeding tickets, seatbelt violations. The more that you can control those, obviously, the better off your premium is going to be. The second big piece is, a lot of carriers nowadays are offering discounts for telematics. So carriers, just like most other industries, want more data on their individual drivers so they can better price each individual risk. And they're willing to provide discounts to those drivers that are willing to implement those telematics, usually meaning an app that you download on your phone that tracks your driving behavior. The other big piece of it is I think consumers need to be smart about how it is that they look at their insurance in terms of how they plan to use it. It's not for the nickel and dime type claims. And so two big things that consumers can do. Number one, look at increasing your deductibles. So many drivers nowadays we see still have $250, $500 deductibles when the reality is they probably should be closer to $1,000, maybe even $2,500 if they can afford it. That would certainly help drive their cost of insurance down quite a bit, which dovetails into my second suggestion is, don't use your insurance for the nickel and dime type claims. So don't turn in small claims if you can avoid it. And if you're going to do that, you might as well go ahead and increase your deductibles because you're not planning on turning those smaller claims in the first place.
How much time, Matt, should people, spend shopping around? Are there big differences?
There can be very big differences depending on which insurance companies they're looking to. And so usually what we recommend ideally is 30 to 60 days prior to their policies renewing. That's the time to begin looking. And in the insurance industry, it's largely categorized in two segments. Number one would be, captive agents, those agents that only have access to one insurance company. And then the second category is independent insurance agents. Those agents tend to represent multiple different insurance companies. And so whenever those clients work with an independent agent, they can shop around to multiple different companies to find the best option for that individual consumer. And consumers can go to a website called trustedchoice.com, and they're able to find independent agencies within their own town, their zip code, their geographic area.
And Matt, finally, are you seeing less business because people are saying, well, I'm not going to get a new policy, I'm not going to get a new car because I don't want to pay for insurance?
Where we're located in Ohio, we're really not seeing that yet. Ohio is still spread out. most consumers in Ohio don't have the option to go without a vehicle, and auto insurance is a legal requirement if you own a vehicle. So we're not seeing less business. We're just seeing more and more consumers reaching out to us looking for options because the prices that they're paying right now have gone up so significantly.
Gotcha.
And that's in Ohio, which typically has been a more favorable state from an insurance perspective. So when you get into some other challenging states, typically coastal states, that's even more pronounced in those areas in terms of the number of and the amount of rate increases that drivers are experiencing.
Matt, thank you. Appreciate your time.
Absolutely. Thank you.